Hello and welcome to BQ Prime. Joining us today is Mr. Mitul Shah of Reliance Securities. He's speaking to us after the monthly auto sales numbers of India's largest automakers, as well as on a new development, as reported by Financial Times, about a multi-billion-dollar subsidy scheme for electric battery storage. Uh, Mr. Shah, welcome to BQ Prime, sir.
Yeah, good afternoon.
So first, Mr. Shah, we'll talk about this particular Financial Times report that came out last week about a multi-billion-dollar subsidy scheme for firms that are making to make electricity grid batteries. The subsidy amount is said to be 21,600 crores. We have a few well-entrenched battery makers in India, specifically Amara Raja, Exide, and Eveready, and also Tata Power, etc. From a larger companies. How do you see what is, according to you, the current scenario of battery storage in India, and how it can evolve if this kind of a subsidy comes into effect?
Definitely, this is a new segment emerging with a totally new technology where the pricing is too high because of the prices of the raw material and components. So, such type of government support is very essential when any new industry with a high tech is upcoming. So, despite the existing players working on it, be it Amara Raja or Exide, there are many other players are also entering into this segment and trying with the best of the technology. So we should note that when we want to go for a success of any electrification or a faster EV adoption, sizable cost of the vehicle is primarily EV batteries only. So whatever EV battery related ecology in terms of the price reduction, operational cost reduction, all those parameters are equally essential for the success of EV in automobile industry. So this support will help in terms of reducing the cost of the battery as well as overall vehicle. And going forward, it will be definitely positive development. But we believe that it will be very slow and steady, so we'll not see any immediate positive impact of the same in this current financial year or in near term.
So do you think this particular subsidy scheme, as reported by Financial Times, is well timed, given the two-wheeler subsidy under FAME 2 scheme has gone away? Do you think this will offset the impact of the FAME 2 subsidy? Because we have already seen reports of how electric two-wheeler sales have declined 60% month on month after the FAME 2 subsidies have gone away.
The FAM2 subsidy was quite sizable, so any new scheme probably may not be able to cover up everything, though it will provide support. But this situation we believe will keep changing, and government will also keep changing their incentive structure, either in terms of the PLI or through these FAM schemes or various schemes. When we'll see such type of highly subdued volume for a longer period, if at all, then certainly government will come out with a new schemes. Government right now believes that slowly now industry is becoming decent size enough that it will start progressing by its own without or with a limited support from government. So that is where the government's direction is. But if the industry situation doesn't support or demand situation doesn't remain firm, then government will also certainly keep supporting. But at this moment, this scheme probably will not cover up entire outgo impact of FAM subsidy coming down.
Okay. Moving on from electric two-wheelers to the biggest two-wheeler manufacturer in India, Hero MotoCorp. They have reported their monthly sales numbers on the first. Just a brief look at it. Their overall sales, monthly sales, is down 10% year on year. The motorcycle sales is down 12.3% year on year, but scooter sales are up 38%. So, do you feel Hero MotoCorp is going back to those levels that it has seen in the pre-pandemic levels? Is it going? Is it the continuous decline is going to continue for Hero MotoCorp here on? Because as we know, smaller capacity electric two-wheelers are finding takers in the Indian market. So, does the motorcycle market share of Hero will continue to erode, or is it going to come back now? What do you think, sir?
Hero Corp again primarily operates into rural market, or more than 50% of our domestic volume is primarily from the rural India, where we have seen in last 1 month in terms of untimely rainfall, then rainfall delay, heat wave, all those things continue impacting the rural market as well as farm output. So rural is again still primarily because of the farm output or agri output. So rural economy sizably depends on these things, which is not right now favoring, and that is impacting companies' volume more. So market share maintaining is a challenge for the company and probably would remain for some time. But once we'll believe that this rainfall normalizes and agri output increases or becomes normal, then definitely rural would revive and support its entry level bike portfolio. On the other hand, in terms of scooters, the scooter growth is very high because of the low base. At the same time, as you pointed out rightly, that EV scooters has declined significantly because of the price differential between month of May and June. So portion of these we believe must have shifted to IC engine scooters, and they would not wait now for EVs because the price differential between EV and IC has increased after this FAME subsidy thing. So part of that has also fueled the scooter growth during the month.
Also, so sticking with Hero, they're launching their first product with the collaboration with Harley Davidson of the US today. It's a 400 cc premium motorcycle that they're launching today. Uh, how do you see this particular alliance working out in the future in the premium segment for Hero? I mean, this is their biggest motorcycle that they'll make, Hero.
This is in fact not premium; it's a super premium specialty product, and as we all know, Harley being a global iconic brand. So this is the first product coming from the JV. Being it is produced at India plant, so pricing wise it will be very competitive or probably much attractive. So certainly it would attract some volumes from the Indian consumer, or it would be slightly better volume compared to the earlier Harley version. But in overall pie, it's very small for a company like Hero Corp in terms of any major volume impact or a financial impact. But definitely, on the other hand, in terms of developing a brand or taking Hero to a global level, this will certainly help in terms of improving its brand equity in global markets.
Mhm. You talked about the entry level motorcycles and super premium motorcycles. How is the overall two wheeler IC market looking like right now? Is the super premium or with capacity higher than 125 cc now more than 50% of the market? Or has it, and the 100 cc segment is now less than 50% of the market? Are we looking at that situation right now?
Yeah, that is possible as majority of the customer are upgrading, or even these first time buyers are not going for 100 cc, and many of them are going directly for 125 cc. So 125 cc plus category will continue to grow and would become a sizable at one point of time would be somewhere around 50% or more. And that's how we believe that even upgradation on the premium side will also from 150 cc to 200 cc will continue. Within those higher CC segments, consumer is not preferring the base model now because of the lots of features available at a marginal increase in the vehicle prices. Consumer is now tending towards the premiumization across the category.
Okay. Coming to Hero's rival Bajaj Auto, domestic sales is up 33%, exports is down 33%. How do you see the way ahead for Bajaj Auto? Again, if I want to specify, the super premium product they have launched right now is the alliance with Triumph. So, do you think that is also going to impact? What is your outlook on Bajaj Auto now, going ahead with even the festive season coming up in the next 3 months?
See, again, here also Triumph volume would not be as sizable, though it will support overall volumes and financial to some extent. But in overall pie, it's very small, likes of Hero in case of Harley. But on the other hand, company is slowly improving on the domestic side in terms of the two-wheeler volume as well as three-wheelers are major booster, reporting close to like 100% kind of a growth. But export for the company is a now 50% plus, and which remains a key challenge for everyone, particularly for Bajaj Auto, wherein in past 1.5 year, 1.5 to 2 years, we have seen TVS gaining market share from Bajaj in various export geographies, and TVS becoming number one in few of the geographies. That's where we believe that despite there would be some recovery in the export in second half, Bajaj may slightly underperform TVS on the export volume growth front. And at current valuation, we believe that price positives are priced in. So it is more or less fairly valued, and we reiterate our hold recommendation on this.
Okay. Lastly, we want to talk about Tata Motors. Passenger vehicle sales is up 5% year on year. CV sales is down 8%. EV sales have doubled year on year. Is Tata, at least for its ICP portfolio, staring at a product fatigue because it hasn't had a new product since the Punch got launched, I think somewhere early on last year or into 2021. So, do you think the product fatigue is creeping into Tata Motors passenger vehicle division?
I would not say as a product fatigue, but I will definitely agree in terms of that new products are very much essential at regular frequency, because all other players, including Maruti, which were almost a very limited product on the SUV side, is now continue launching all the products on the fastest growing SUV segment. So considering that and various other products from Kia, Hyundai, competitive intensity has increased. So if any companies try to bet on the success of existing old products or one or two products, it is not going to be as supportive for a longer period. So you need to have new products, and definitely companies also going to launch few products in next festive season.
Mm-hmm.
So it would then cover up the company's market share loss recently, which it has witnessed.
Mm-hmm.
But still, because of the higher intensive competitive intensity, we believe that gaining market share for Tata Motor would be a challenge now onwards.
Okay. What about the decline in commercial vehicle sales, sir? How do you see this as the reflecting on India's economy in that sense? Because it's the largest commercial vehicle maker in the country.
See, we believe that commercial vehicle, particularly MHCV cargo segment, is going to witness its peak out situation during mid of FY24, and FY25 would be a double-digit decline for this industry, because it is already a cyclically reported a very high growth, and in terms of a tonnage-wise capacity, industry has surpassed number in FY23 itself, which was recorded during FY19. So in terms of volume number, it is slightly lower than the peak level, but in terms of tonnage-wise capacity, it has already surpassed that capacity. And that's why we believe that going forward, FY25 would witness a double-digit decline for this segment. So we remain more cautious about the overall MHCV segment for every players.
All right. Thank you so much, Mr. Shah, for joining us today. It was quite insightful, your takes on the auto sales numbers. Thank you, viewers, for tuning in. This is Tushar for BQ Prime.